This month's share supply today in May 2021 is for stock that invests in renewable infrastructure that works towards creating a zero carbon future. So in other words, when you buy shares in this stock, you're putting your money towards a company that invests in a greener tomorrow. And with there being so much financial backing and motivation from the government, especially to meet the net zero emissions target by 2050, there is some serious money to be made here, guys. I mean, just look at the net income in grey compared to revenue in blue of the last several years. It's impressive, guys. So with no further delay, the stock I'm on about is called TRIG, the Renewable Infrastructure Group Limited. But before I talk about TRIG further, make sure to do me a favor, guys, and that's to take my channel to the next level. And you can do that by liking this video, sharing it too, and subscribing with the notification bell on as well. And as you guys could have probably guessed, the ticker symbol for TRIG is TRIG.L in the ftse 250 of the London Stock Exchange. And right now they have the current share price around £1.20 per share. But the $1 million question is, can we see the stock going up in the future? And I believe a big part to answering that question is looking at their financials. Let's just see what's going on there. And starting off with the income statement. This stock sits pretty high, if not at the top, for the most profitable stocks I've seen to invest in. For me, the most important thing when it comes to income statement is profit margin. That's pretty high on my pecking order, you know. I need to know that the stock is making as much profit from their revenue as possible. And as you can see here with this stock, does not disappoint at all. They get to keep majority of their revenues in the form of profits. There aren't many stocks like this. Generally speaking though, they've also increased their revenues and profits throughout the years. Granted, the most recent year has taken a bit of a dip, but I reckon this is due to COVID. You know, the government's probably more focused on paying for furlough money than they're focused on, renewable sources. And that explains why. But for me, the main reason why they can boast with such an incredible income statement is because of this section right here. It's their expenses. For a stock to keep its expenses consistently low throughout the years is a very difficult thing to do. But they do it with so much ease, people. And it allows them the opportunity to have such a high net income and boast about such a strong income statement that you guys see. However, it's not finished yet. There's more on the balance sheet. And just like the income statement, I couldn't believe what I was seeing, guys. Their total liability is so low. I had to question whether this was real or not, but it is actually real. Just in short-term assets alone, the stock is able to cover its total liabilities 21 times over. And when you look at the long-term assets, it's able to cover the total liabilities 1,300 times. It's crazy. But arguably, what I like about this balance sheet the most is that majority of their assets come in the form of long-term investment. And this stock knows how to make money. So guess what they're doing with their profits? They're putting it back into the company to make even more money. Such a brilliant business model. But before I give my full verdict, even though it's probably easy to tell what I'm thinking, let's see what the final financial document is saying. And to no surprise, their cash flow statement is strong, people. Just look at the cash from operating activities. It's been increasing throughout the years. I reckon a lot of the credit goes to crazy numbers that they're all doing in the income statement. Has put them in such a position to grow year in, year out. But what I like to see the most is this section right here. They're crushing it with their cash from investment activities. It's getting more and more negative throughout the years. And this is brilliant news, because what they're doing with the profits that they're getting is that they're putting it back in towards the company, guys. Reinvesting it. This is investing in its purest form. However, one thing that's concerning is the cash from financing activities is positive, which indicates that this company is willing to borrow more and more of other people's money rather than use their own. And as an investor, that can make you think, why are they doing that? Is it because they don't have money? But when you sit down and really think about it, it makes a lot of sense. They're an investment group. Their whole business model is built on using other people's money to make more money. And so I wouldn't be surprised if other investment groups would also have a similar positive section in their cash from financing activities too. So in this case, I believe it justifies why this section is positive, especially when they've been as profitable as they've shown. In conclusion, I believe this stock is the real deal, people. They just make so much money in profits when you compare it to their revenue. It's crazy. But what I love about them even more is the fact that they have a hunger, to reinvest the money and put it back into a company. It just speaks volumes about their desire to want to grow. And as an investor, there's very little things other than that you want to see the most. I've sifted through thousands of stocks and I haven't seen many quite like this. But the big question is, what do you guys think? You know, I've done my part. I've presented this stock to you. It's up to you guys to do your part. You know, make sure you do the research on the stock and let me know down in the comment box below what your thoughts are. And while you're there, make sure to like this video, guys. Share it too. And subscribe with the notification bell on as well. It's your favorite YouTuber, Decent and Finance, sharing my thoughts and my experiences with you guys every Sunday at 3 p.m. Have a great day, people. Bye.
Whoa.